Hi, everyone. How's everyone doing? I'm talking to you live from Hotel California, where you could check out, but you can never leave. How's everyone doing today? Yeah, good morning, good day. We're on stay at home here in California until the National Guard gets here. So, some of my worst fears are here. Okay, so you never know if you have faith until you need it. Let's see how I do. And let's get to the market. So this 103 level in the Dixie was 1.618 as a target. Of course, what a dramatic week, 2 weeks. I mean, when I was buying the dollar down here at 5.5, I thought it was a great trade to here, 97.89. All right. I certainly wasn't expecting this until we did this. So definitely looks like we could get some type of ABC back here. So to me, it looks like the line in the sand now is closing, have to stay above this 98.80 level. See this horizontal line, but we could get a pull back to par and make another move. I'm not sure if this is going to be it. Okay, there's your daily, because we haven't taken out the high of the move. I have to go to a monthly to show it. So what was this high? 103.82, and so far the high here has been 102.99. So some unfinished business up here. I don't know, maybe we're going to 107. You could come up with all kinds of upside numbers. In fact, if you kind of look at it, and if you believe you could have, you know, head and shoulders as continuation formations instead of continuation formations, why can't this be the left shoulder and this be the head, and last week be the right shoulder, and we're at the neckline? If you do something like this, you're talking 120. Okay, you're talking 120 on the dollar. That would be sub parity in euro. And since cable's already taken it on the chin, you could see EG's finally coming off. Now it's going to be euro. So these lows, I believe the 2017 lows, are definitely in jeopardy in the coming weeks. And let's see, S&Ps did what I thought they would do. Looking at this black line, did hold. A few pullbacks, tried to get back to it. But I have something, kind of, it's starting to look more like a wedge here. And let's say we kind of got right there. And then this is a throwover line. So, there's a lot of stuff up here at the 25.5. I would actually think that we could get one more low. And I know it sounds impossible, especially with what's going on, but if this is a falling wedge and we start to break out over 25.40, you look at the fundamental backdrop, and I have no idea how it could happen, and it sounds impossible. But you know what? The dollar move at one point looked like it wasn't going to happen, and it happened. But the top of the wedge, guys, is oh, you can't get money out of the ATM, Zig. Okay. So anyway, top of the wedge is 3,100. And, you look at some other charts, and, you have moving averages that are about to converge at this old throwover line. So it's an outrageous call, but it's saying that, maybe after a new low, and we don't have to have one, I think it could happen. I've seen some counts where we have one more shot down in the low 22s here. But we start coming out of here, you know, you could start looking at different types of corrections. You know, this is only 23%. We didn't quite get there, but anyway, that's what I see. Okay, so looking at gold, had a feeling yesterday this would hold. This, you know, if this holds, we could still get a rally up towards 1600, and the gold silver ratio is turning. I would love one more washout in the silver towards give me one more low, because the RSI here was diverging over 30. Maybe it's enough. Maybe we're just going to pull back to 12 before we get another rally here, especially if the dollar's going to come off. You know, everything's binary right now. So everything got sold off because of liquidity. So if we do get a bear market rally in S&Ps, I think, you know, everything went down together and everything could rally together, just different magnitudes. So this is what I'm really paying attention to. And I have to show you this, and this tells you that no matter what happens to the stock market, we have major problems, because the stock market did stabilize, but look at investment grade debt yesterday. Look at that. This is not the junk bond market. LQD is the ETF. Is there blood on the streets next week, Ben, buddy? I'd say that there's not just blood on the streets, that the streets are, there's a flood of blood on the street. So it could be next week. It could be a bear market rally that's going to really just rip someone's face off trying to get short down here. Be careful out there, guys. This is really not a good sign, even on a weekly basis. Look at this. How about a monthly basis? We have a credit crisis, full-blown credit crisis. That's why the Fed is doing what it's doing, trying to backstop all the paper. I'd call this a pretty negative monthly candle. Okay, I'm going to go with it. Ben actually saw the S&Ps on a 3 drive before, but look at this monthly candle. And this is, you know, investment grade. So the margin, what they're doing is they're selling off the margin account for all the corporations that borrowed money to buy back stocks, something we talked about a long time ago. So now their margin rate, their interest rate for rolling debt on whatever they financed, and we know what they financed. They financed their own company's stock, which has also lost 30% in value. So the collateral's lost 30% in value, and to finance it again and roll it is going to be 30% higher in interest. So the Texas hedge is a dangerous game. Blake, how you doing? I'm locked down here, bro. I was going to come see you this weekend.
Well, I was going to say, I'm not on lockdown. You are on lockdown.
I know that. I do believe there'll be National Guard troops out here in California. You know, Newsom's saying that half the state will get infected within the next 8 weeks.
Yeah,
that's our governor.
That's pretty scary.
I'll admit it. You know, I'm kind of a homebody anyway, Blake. I don't run around like I used to, but
yeah,
when it's my choice to cocoon is different than a government telling me I can't leave. That I'm very uncomfortable with. Well, because, you know, who's experienced kind of a degree of martial law before in this country? Not me.
No, I mean, I don't think any of us have, right?
Yeah. So I don't know. So I'm not going to make a lot of calls because I'm freaked out.
Okay.
All right. Yeah, I'm being honest, bro.
Yeah, no,
I'm freaked out.
I hear you. I totally hear you. So, yeah. All right. So you, all right. Let me go ahead and
you know, you're not locked down. You have freedom. So you probably have a clearer head than me.
For now,
I'm a prisoner.
Can you see the euro?
Yeah.
Okay, so here's the euro. Okay, so I actually want to talk. I want to take a few minutes and talk a little bit about the S&P, and
Okay.
here is this is I posted this chart in our chat room, but I want you
Uh,
guys to really look at this because I think it's important. This is the S&P, and
I
if
like
you
that.
take this is the FXCM CFD or whatever it is, or ETN, or you
Yeah.
know anyway, but if you look at the index and you look long term, it's the same, basically the same thing. We had this big, long, multi-year trend line that came all the way from the financial crisis in
Yeah.
2009 to where we're at today. We are below that trend line, and we bounced to the underside of that trend line today. So today's highs, which
Okay.
comes in around
Great
2,500,
line.
that was it. So the reason why I want to bring up this chart, and the reason why I think it's so important is because if you guys are bullish, I think the place to be bullish is if we break back above today's highs and we close above that. Now, it's entirely possible. I'm not saying it's impossible. I'm just saying that while we're below here, it's very difficult for me to get bullish equities right at this moment, knowing we're going into Friday, knowing that, hey, maybe we do go on a nationwide lockdown, knowing that, that I don't, you were just pointing out like some of the corporate debt.
Yeah.
I don't, I don't see us like out of the woods yet, but maybe I'm wrong, and I'm hoping I'm wrong. Um, but what I want to point out is that we are really challenging some key resistance where we're at right now. And I feel it's a little premature to get bullish. I do think that we will consolidate, and I think there's going to be two-way price action around these levels, which I hope we get. I like having like the two-way, little bullish, little bearish here and there, and be able to some of these ranges kind of tighten up a little bit, give us some more range trading opportunities. But like the overarching theme that I think we should be paying attention to is we are still below key resistance. And you were talking about a lot of this high yield debt. I mean, we got to watch like HYG, and some of those, like we got to keep an eye on the bond market too.
Yeah. That
If,
LQD is actually investment grade. It's the highest rating of corporate bonds, which is scary. I mean, if it was just
what's the symbol?
HYG, LQD, like LQD.
Yeah.
So
And
these are investment grade, not junk.
yeah,
They look like junk now.
right.
I
Last
This
time we
is
think
why
saw a
the
move
Fed
like
is
this.
freaked out. Yeah.
I think the problem, as I've said about indices as well, Dale, I think the problem is where they started from. The
Yeah.
reason we have these type of moves
Good
is
point.
because the bond market had completely depriced any type of risk existing globally whatsoever. So
Yeah.
when you start from the point of thinking that things are going to be rosy and beautiful for the next 200 years, and you suddenly have to price in a recession, perhaps even a depression, obviously you're going to have like such a huge move. So once again, the problem is not where we're headed, the problem is where we were.
So we were on Mount Everest taking this fall instead of just up a little molehill.
Yeah,
Good
probably we
point.
were on the moon, not on Mount Everest.
Yeah. Okay.
Yeah, I mean, and
Good
it's a
point.
great point, Steve. I mean, and that's kind of, you look at where these government bonds are at, and take a look at where the 30-year is. You know, Actually, let me pull up where it was anyway. I mean, you take the 30-year bond market, and they were selling off, or this is the yield, but let's go over to the 30-year. I mean, we were ripping towards highs I mean, and this is, this is long-term government bonds. I mean, these start to come off, and alongside with, the high yield investment grade corporate bonds. I mean, we are facing a credit crunch, and you understand why these central banks are doing so much. Now, let's turn our attention to currencies really quick. And the euro is obviously trading really heavy, and I know there's a lot of people trying to buy it down here, but it's still overall still trading pretty heavy. And I don't know if we're past this like dollar liquidity issue. I do think that we might be range bound for a couple of days, which would be a welcome sight. I mean, you look at the cable. Here's the cable below, key support. We stopped at the 127% extension of this move. I think the pound's probably capped at 120. And I think support's going to be at 115. I think we're going to bounce around in these ranges for a while. If you read my daily analysis on ForexAnalytix, if you were on the platform and you read some of the end of day analysis, I'll just give you this last night. The Aussie dollar, and this is March 19th, the Aussie dollar is grossly oversold, and buyers did step in ahead of the 55-cent level. While we are below the 60-cent level, the risk of further move lower is high. Price action suggests we may consolidate at these lower levels. If you were paying attention to this and you're like, oh, this is last night. We were down here last night. And you're like, oh, I read what Blake said. Okay, we hit 60 or really close to 60. And we're stopping. All right, that makes a lot of sense. I do believe that the Aussie dollar is consolidating here. Now, if you think about that and you're like, oh, okay, we're closer to 60 than we are 55. Yeah, that it's got to make you a little skeptical on being on the long side, of the Aussie here. Now, I do also believe that if stocks rally, the Aussie is going to rally. So, if we do get a break higher in the stock market, then the Aussie dollar is going to break the 60-cent level. But I think while below 60 cents, you gotta be thinking, we're in a range, and you got to trade the range that we're in versus trying to I think a lot of people are going to be very misplaced here when you're talking about a recovery in stocks. A lot of people are looking at the stock market and they think that there is going to be, and I know I've talked about this, but I'm going to say it again because I do think it's very important. A lot of people talk about like, oh, there's going to be a V-shaped recovery in stocks. I really don't believe that. I really believe it's going to be an L-shaped recovery. This virus has done an absolute, and it's kind of where Steve was talking about, it's done an absolute number on the global economy, just a wrecking ball. And if you think that everything's going to be back to roses and unicorns and rainbows, after the virus is, we find a vaccine or something, I really don't believe that's going to be the case. I think that yeah, we are going to have people eventually going back to work, but it's going to be a slow process. And, China may never be the same again. Hell, the US may never be the same again. I look at, let me pull up really quick. I hate having these conversations with you guys, but it's, I want to be real. I don't want to.
By the way, Blake, did you see China's revised global yearly target?
So stupid. So
from 6% to 5%.
So stupid. It is the stupidest thing. I'm like, oh, you're going to grow at 5% versus 6% this year?
Yeah, and we're talking about the only country that literally it has been in lockdown for the whole year. I mean, year to date. So at the very least, they have 1 quarter of who knows how much of a negative growth. It has to be insanely negative, like minus 10% or whatever.
So this is the Nikkei from you go back into the 80s, and let me grab my drawing tool really quick. So bear with me. I'm just kind of moving things around here. So I think we're here. Or here. I'm not really sure. We're here or here. Okay. I actually think we're closer to like this right here in the S&P. And I think we're going to get an L-shape recovery. Hopefully this doesn't happen. I hope it does one of these, in the S&P. Jeffrey Gundlach, he did a really interesting. If you guys are on YouTube, go search Jeffrey Gundlach on Yahoo Finance from like, I don't know, 3 or 4 months ago, and he talked about the global economy in quadrants. Japan being the quadrant in the excuse me, really quick. Talking about Japan being in the quadrant of the 80s. Then it was Europe Europe was in the 90s to 2000s. This is where Europe was. Latin America was here, and we in North America were here. So he's saying that every quadrant of the world had their heyday, if you will, and I believe we just got finished with our heyday. And the sad thing is I don't know if you look at the S&P, and this is the Nikkei, remember, but if you think about where the S&P was at 300 or whatever, I just don't think we're going to see that anytime in the near future. And like I said, this is the Nikkei from the 80s, but we're probably here currently at 2400 before we head to 1700 in the S&P, and then hopefully we do this versus any of that. And guys, I'm not trying to give you scared tactics or anything like that. I'm just trying to just be real with you, and I hope you can appreciate it versus going, oh Blake, you're fear mongering and yada yada yada, because I'm not trying to, but I am trying to be very real with you guys, understanding that this pandemic that we're dealing with, it's not like everything goes back to normal. We're going to have a lot of job losses. They're going to mount in the crazy ass numbers here in the United States, and I'm sure globally. We are probably going to be in a recession. Some people say depression. I hope we don't see that kind of stuff, but really like a prolonged recession seems realistic, and it's going to take some time to work it all off. I think as a currency trader, we have to really focus on these commodity currencies, whether it's the Aussie or whether it's the Kiwi or it's the Canadian or it's the peso or, some of these other emerging market currencies, or even, like Norway, and look at their currencies and see how they're responding. Because they are still ultimately commodity currencies, and they're going to give us the biggest and best, from a currency perspective, idea of what global growth is like. And that's why if you look at the Aussie and you go to a weekly chart and you look at this chart and you go, holy crap, we are at levels we haven't seen since 2002. Well, that's telling you, it's telling me anyway, that we're backing up in time to that point in time. Think about 20 years ago, where we were at 20 years ago, so, sorry guys, I know I'm Debbie Downing it right now. I'm sorry. I don't mean to be so bad, but anyway, you guys can either, like it, love it, hate it. I mean, I don't, I want to, but what I am optimistic about, and let me tell you this, I may not be super optimistic about the economy or what's happening. I am optimistic about our medical professionals in this world. And I do believe that, in medicine, they're going to find some sort of cocktail, some sort of drug that really stems the the seriousness of this coronavirus in the years ahead. So I am optimistic about that. I'm just less optimistic about the global economy because of what Steve said a little bit earlier. It's not where we're at right now, it's where we just were. And where we just were, this, you know, excessiveness in everything, I think the playing field is going to be leveled a little bit over the course of the next couple of years. And for that reason, you just have to be, you know, really, really careful. And again, I'm just trying to be real with you guys. And like I said, I hope you guys can appreciate that. One last thing I do want to mention is that, you know, if you are not part of the ForexAnalytix family, you know, this webinar is brought to you not only by ForexAnalytix, the #1 complete market analysis platform. I'm joking. I'm trying to sound like a sales pitch, but no, we do have an offer for you guys. And we put that together this week because we're like, well, you know, if you guys want a safe place to go, you know, as a trader and have a good chat room where you guys can hang out with us, then, you know, we want you to be able to take advantage of it. I know it's not an easy time for anybody, so we're going to try to ease that the best we can from our end. Also, if you, our webinar sponsor is really Forest Park FX. And if you can go to the reimbursement program, if you're like, well, I'd like to see if I can get ForexAnalytix for, you know, paid for through my trading, and you don't live in the United States, then you can do the reimbursement program. If you do live in the United States, you could also opt for a cash back, where you can actually, and everybody should be doing that. So if you're trading, you should be receiving some sort of check for the trading that you're doing. So, so make sure you reach out to them. You can contact them right here on Skype, or, you know, there's an email that goes directly to Forest Park FX. Even though it says our email address, it's actually to them. They're the ones that respond to those. So anyway, guys, I'm going to pass it over to you, Stelio, Steve, and Dale. I hope I didn't totally depress everybody here. So the last thing you need to hear is from me. You guys, hello?
Sorry, I was just off to get
Yeah.
and hang myself.
Sorry, my bad.
I actually kind of agree with you, unfortunately.
I'm having a cocktail now.
That's unfortunate. Yeah, believe me, I'm gonna be drinking a few beers tonight, so I'm assuming I'm gonna get up with a hangover tomorrow morning. So, you guys, good luck. Trade safe. Remember, trade smaller. Volatility is still very high. Don't overexpose yourself. And I'll see you guys on the week ahead video over the weekend. So be on the lookout for that. I'll have a lot to talk about, and I will try not to be so depressing. Thanks, guys. Have a great one, and good luck today.
See you later, Blake.
You too.
Bye,
Thank
guys.
you, Blake. You know, speaking of equities, I kind of agree with Blake. I don't think we've seen the low, although our users will have seen that my bias now for the S&P and the DAX turned to neutral. I was bearish from, I'm not going to say the highs, but close to. I think now we're probably going to see another low, but I think we're going to be trading sideways for a while with some, you know, decent swings for sure. But I think the power of the global stimulus, you know, monetary and fiscal and everything,
Big bazooka.
Yeah, I think the power eventually is going to control the markets a little bit. We're going to see volatility, but I think going forward, if you take out the short-term noise, I think we're going to be sideways. And I agree with Blake, the recovery is not going to be V-shaped, I don't think anyway. But it will come, but it will take a little bit longer than some people think. We have some numbers, whoever looks at that. Still February numbers.
Yes,
Retail
still February
sales
numbers, so it shouldn't be that much affected.
yeah,
Canadian
Canada numbers
sales.
is January, so that's even should be.
Oh yeah, that's completely obsolete than having to do with what has happened since.
Let's have a look at those, and then we can.
Yeah,
we
15
can
seconds
continue.
left. I have here the USD CAD. USD
And-
CAD pulled back substantially, which makes sense because these currency pairs, USD NOK, USD CAD, they had really gone parabolic. So it was expected that they would.
Yeah. Okay.
Okay. So yeah. yeah, completely unfazed because they're backward looking, so nothing to see here.
Yeah. So, you know, I've been thinking about it quite a bit about equities. The move has been very fast, very sudden. I think we're gonna probably trade sideways. Like Blake said, the damage done to the economy is not negligible. It's going to be big. So the governments have tried or are trying to mitigate this, but you can't get away from the fact that, you know, you hear everywhere, you know, restaurants closing, firing people, and you know, all these services that you need people to, you know, if they can't spend basically 2 or 3 months without clients, end of story. So without income. So this is gonna be a weight on the global economy. I'm not saying we're all gonna die, no, but it's gonna be a slow recovery.
To be honest, Elio, and I've said it before, I'm personally more worried about what's going to happen in the medium to long term if they succeed in papering over this blowing up of the previous bubble, especially when this came after a very, very real threatening event to the economy, right? So I'm more afraid of the repercussions if they actually manage to quickly paper over the problem than what's going to happen if we get a slower type of recovery, which under these circumstances would be, you know, what would be expected as the norm. I mean, we should be in at least several months in a period of recession, and then hopefully get the economy, of course, you know, pulling out of it slowly, because that's how these things happen. Don't forget, people that, you know, many people believe that recession is a problem. Recession usually is the cure to the problems, to the excesses that have developed during, you know, the period of expansion.
Boom.
So, during the period of boom. So, you know, as you try to persuade, you know, a young child that you have to take the medicine, although it tastes like it's, you know, although it's bitter because it's going to be good for you, you know, a recession is the same type of thing. I mean, you have to go through a recession for the economy to rebalance itself and then go into a healthy recovery. I'm afraid with what they're doing, that's not going to be the case. But, you know, we're going to have to find out. Regardless, yeah, the economy is, you know, is very, very unlikely to just, you know, jump out of this in zero time and everything go back to normal like it never happened, because these things don't work like this.
Agreed. Yes. We have a friend here, Richard. Sorry, who is it? Rob, who's asking what my view of euro sterling is. We'll get to the
euro sterling. Actually, is one of those tricky, dangerous ones, because look at this. The price action in euro sterling has been really a roller coaster. I was looking at it previously. I mean,
let me give my long-term opinion, and then you can have a look at the chart. Basically, for people who have been in the chat room and here on this webinar as well, a few weeks ago when euro sterling was trading at support at what was it, 83-ish, I said, look, I think for the rest of the year, as we price more bad things, this was before the coronavirus really hit. Okay, I was saying, okay, I think we're going to start edging towards the upper band of this kind of channel that we're through, which is around 92, 93. As we get closer to the end of the year, we have the deadline for Brexit negotiations. Nothing's been done yet, so the market is going to start getting quite nervous. I said, look, I think we're going to squeeze higher going into the year end as negative things get priced in terms of how Brexit is going to go on. But then I said again, I think that in the end, something is going to be formulated. They're going to agree on something, good or bad, I don't care, but they're going to do that, and that will be that. As it turns out, we got to 92, 93 within 2 weeks or whatever it was, 3 weeks. And yesterday, my bias for ForexAnalytix members had changed back to bearish, because I think now we went to the other side. You know, all the negatives are priced in. Boris Johnson's attitude towards the virus was, in my opinion, wrong from the beginning. Now he's changed, thank God. So they're trying to contain it. So now I think we're probably going to start edging lower. I'm not saying we're going to get to 83 again, but I think we're going to get towards the middle of the of this range as we get closer to year end, and then obviously it's going to be Brexit related. What's going to happen? So I am bearish at the moment, and I switched bearish above 92. Obviously went to 94 or something, but
Europound has definitely whipsawed a lot of people. I mean, we had a new high there, an incremental new high, probably stopped out everybody that remained to be bearish. Then we turned lower. We had a new low, even a lower low from these lows back then in 2016, so an incremental new low. So we wiped out anybody that was long. Now we went all the way up and posted a higher high, probably triggered a lot of people long, and definitely anybody that was short was out of it. And since yesterday's high, we already have seen what, a 300 pip move lower, which 400 pip move lower, which for a pair like Euro Pound, 400 pips in 1.5 days is like, you know, crazy volatility, right, Stelio?
Oh yeah, absolutely. I don't remember seeing this volatility since 2008.
Yeah, so it's, from a technical perspective, it has definitely been a beast.
And I think this false breakout there is
Yeah.
huge.
I mean, false breakout from this ascending channel, false breakout from the previous highs, and boom, that's it. Reversed lower, and it seems to be picking up in momentum. Currently, as we speak, testing this 91 is a support resistance area, so we might find some type of support, some type of, you know, relief, or at least consolidate here. But definitely these last three candlesticks, especially if we close more or less like this today, are forming a very formidable like evening star formation. So I would definitely not be long up here, especially with what I see on this chart. Anything else that we had, Stelio? Any announcement? Any?
Yes, we had the Norges Bank cutting rates 0.75%. They went to 0.25%. The market didn't care a bit because you know how the krona
because it had already, it had already sold the currency like it was nobody's business.
Yeah, absolutely. And so that was really the main economic event of the day. Nothing else to
speaking of which, just look at yesterday's candlestick here in USD NOK. Huh?
Yeah, this is ridiculous.
Massive.
Same with Euro NOK. Yeah.
Massive. I mean, at some point we were more than 7% up on the day, and we actually closed negative.
The daily candle, I think, was 10% range.
Yeah, which is
insane.
For currency pair. I mean, it's like a penny stock. I mean, these type of moves you definitely don't see every day in FX.
Yeah.
So I think a big warning sign here, probably a very wrong place to try to be short the NOK, because it's not only against the US dollar. For example, if we have a look at Euro NOK, where is it? Here it is. So if we have a look at Euro NOK, yes, this candlestick was equally ugly. So I think after this blowout, because we're talking about like a massive blowout to the upside, both in Euro NOK and USD NOK, it seems like, you know, that might have been it. And I wouldn't be surprised if we see much lower prices from here, at least in the short to medium term. I mean, I'm not saying that, you know, you should turn bearish because this is a massive move. But what I'm saying is that a currency pair, especially when we're talking about a very fundamentally solid one, that moved higher more than 25% in like 15 days, I don't think you should be, you know, trying to get in the direction of the trend, because this might have been a blowout top. So I think that being short the Norwegian kroner against more or less anything at the moment is quite a bad idea. Especially another indication is, as you said, Stelio, the sliced rates, and the market didn't care anymore, which means that, you know, what happens to a currency pair that it stops responding to something, to events that theoretically speaking
Yeah.
should be
Yeah.
negative about it, right?
And also when you're trading NOK, just like CAD a little bit, you're trading oil. And where's oil?
Yeah.
In the 20s. Where's it going to go? 10? I saw calls for oil at 5. Somebody was talking about negative price in oil
Yeah,
because of
did you see
storage.
my retweet?
Yeah. I mean,
That guy Wiesenthal, he quoted somebody that said that
Yeah.
they actually believe that crude might not just go to zero, but because of lack of storage, it might actually go to negative prices.
So people think that they're going to
Yeah.
keep producing at costs where it just doesn't make
Yeah.
any sense. Anyway, I personally think oil has upside. Obviously, it could go lower from here, but I think overall, if you're trading with a longer term horizon, it just cannot stay in the 20s simply because production is starting to stop. US shale producers are very
They're gonna blow
unprofitable
out.
here, and they're going to
Yeah,
blow
they're
up. They
gonna
have
blow
massive
out.
debt, and not just them. It's the Saudis obviously have, I think, what is their cost, like $10-12, very low. But other oil producing countries, big ones, they have like 30-40. It's not the Saudis are the cheapest ones, and I think Venezuela as well. But production is just going to stop at some point.
But Venezuela has other problems. Venezuela, after what has happened during the past few years, they have a huge problem because the infrastructure has started breaking down, and they don't have money to restore it. So now they've started, they've started working on it during the past year, but they're not even back to full productive capacity. So Venezuela is a case of its own. But I totally agree. I mean, the lower crude goes, the bigger the risk that you're going to wake up one day and it's going to be up 20%.
Like yesterday, yes.
Yeah.
Exactly.
Yeah, and then the only difference being, Stelio, is that if we indeed reach prices like, I'm not talking about zero or negative because in my opinion that's not even a joke, but let's say we get to prices like 15, I think that you can see some craziness, like seeing back-to-back 20% up days for 2 weeks.
Absolutely.
Yeah, and you don't want to be in the wrong side of that move.
Of course. Yep. Let's see what happens. It's been a wild few weeks, and I'm sure we might get a pause now, a relative pause, but I don't think we're done yet.
Anything else, Stel, that we had overnight?
That is it, my friend.
Okay, cool. Now, clearly, we're seeing an attempt from indices to stabilize. I'm still long. Chi is asking if I'm still long the S&P. Yes, I'm still long the S&P. As you know, I either don't use stop losses or I use very loose stop losses. Unfortunately, we can't do the same with patterns in play. And due to the very increased volatility that we have at the moment, we're actually going to make a change in our patterns in play. We're going to add the ability to have parts of a full position. So in essence, we will be able to use patterns in play with, let's say, half a position or whatever, because I had to be somewhat strict due to it being a pattern in play with my pattern in play, and it would barely got stopped overnight. But I'm still long and just a little bit in the money at the moment. I was very decently in the money at the highs, but I didn't enter this trade to have a bad risk reward ratio. So I don't want to see a lower low, and that means that my target remains what it was, which is 2600. So I'm either going to have a losing trade here, or I'm going to make a decent profit with a move to 2600, because that was the initial parameters I had set for this trade, and these are the parameters that remain for me. So my cost average is at 24.20 roughly, so just barely in the money at the moment, and I want to see if that was indeed the descending wedge I was talking about. I mean, if this is the formation that is actually playing out in the market as we speak or not. So I guess we're going to find out today, because if that's the case, I don't want to see S&P retracing more than let's say 20 lower than 2380, 2385. I would want to see another leg higher towards 2600 later on. So my the thesis that I had since the day before yesterday, and I expressed explicitly yesterday in the webinar, that I'm expecting we might see some type of rebound from here, remains, both for the S&P, and I also mentioned yesterday the DAX. So as you see, DAX actually much cleaner than the S&P at the moment. So I want to see those play out. And as I said, if they are to play out, I would expect these wedges to do what theoretically a wedge should do, which means fully retrace to the to the start of the wedge. In the case of the DAX, that would mean a move almost towards 10,000. In the case of the S&P, that would mean a move towards 2,700. But I've kept my target here more conservative, towards that support resistance area, which is at 2,600. So that's what I'm looking for here in the indices. And as I've said again and again, don't confuse my short-term bias with my general bias. My general bias, of course, remains bearish. I do think that, even if we see a rebound from here, even if it's sharper than what I expect, it is to be sold. I think that we're still going to be seeing, we still haven't actually seen really bad data coming out of this, because data are backwards looking. So I think that once data for March start coming out, it's going to be quite bad. And the market's going to get spooked once again. Now, having to do with FX, having to do with Euro USD, quite a decent rebound yesterday. I'm showing 4-hour charts. If you want to go to the daily, we can go on the daily. And I actually want to go to daily briefly to show this trend line support that actually acted as support as expected, and has produced so far a nice rebound. So how much can we rebound from here? Not sure about it, because as I was saying yesterday, I would expect that the dollar should pull back in the very short term, and that's what we're seeing. But I do expect the dollar to go bid once again. Now, is it going to be immediately after 1 day? Is it going to be after 2 or 3 days? Nobody can know with certainty, but I would expect the DXY eventually, since it has done what it has done, and we have the liquidity issue that we have, I would expect the DXY to actually produce a higher high. And by a higher high, I mean, let me zoom out so you can see, I mean a higher high from there, okay, from the December 2016 high. So I would eventually expect a move above 103.80, perhaps towards 105, who knows, a little bit higher. So that would imply lower Euro USD prices. And from there, I would be looking for a long-term selling opportunity for the dollar, as I've said, and I've tweeted about it. I expect that once the dollar peaks within the next few months, we can end up seeing a 30% move lower in the dollar in a period of 6 to 12 months. But we're not there yet. Okay, so any pullback in the dollar, especially as long as we remain above 100 in the DXY, I'm going to be viewing that as, short-term pullback before seeing more dollar strength. So I'm not expecting much in the rebound here from the Euro USD. More or less the same applies with the pound. Keep in mind that 119.50 to 120.50, this area there is quite a significant area that should act as resistance. This is what we drew yesterday, that we might see a rebound towards that area and then a continuation lower. So far, this rebound is playing out nicely. So far, today's daily candlestick is an outside white candle, so quite a nice bullish reversal candlestick. But as I said, I don't think any rebound can be very long-lived here. Might last for a few days. We might see a consolidation, but I would expect eventually to turn lower once again in the short to medium term. Now, let me go through some of your questions and see what you want to know. Hi, Blake, what does an L-shaped recovery look like? Irfan, I think that Blake answered that question when he pulled that Bloomberg chart. He actually showed you how an L-type recovery is. instead of being a V-shaped, meaning, sharp move lower, sharp move higher. It's a type of move that you have a sharp move lower, and then you have stabilization instead of like, a huge rebound. So that's an L-shaped recovery, means a recovery that, starts with a period of stabilization, which might be a quite prolonged period before you can actually see a decent rebound out of it. We have questions about the Nifty and the USD INR, and we had these questions coming through, during most of the previous days. So I'm going to cover that. I didn't have time the previous days, so I'm going to do that before we switch over to the interview, I promise. Let's go through some of the rest and we will have a look at it. What's favor a turn coming within days, says Ben. I don't remember the context, so I don't know if you were talking about a turn higher or a turn lower following that. But in any case, yeah, I do expect a short-term recovery before lower. Dan says, yeah, we came from Mount Everest. Good point, Dow 30,000 almost. USD China reversed last night. Just heard New York City news. China has no new cases. For what it's worth, Forex Gal, in my opinion, it's worth almost nothing because I don't trust Chinese data. I really hope that's the case. I really hope, because we're talking about human lives. But having seen in general, how they report stuff, especially having to do with the economy, and knowing that this affects, the economy in a big extent, I'm very conservative in believing whatever they say. I really cross my fingers and hope that, they're honest about it. Kevin says you're keeping it real. If I wanted an optimist, I'd go watch Kramer. Don't get me started about Kramer, honestly. I totally agree with you. How do you see Aussie CAD and Euro CAD? Looking for long on pullback. Also, could you please have a look at RDSA, which is sell? Absolutely. Let's do both.
Booyah!
Coach? Okay, so here is sell. Now, to begin with, I think it's much better under these circumstances to have a look at it on the weekly chart. Okay, so here is sell. And it's worth noting that we're out of this broad move. You can see it here. This rebound was never looking impulsive in nature, right? You can see it here. And we are at, very low levels, traditionally speaking, okay? So I would be looking for a bottom, but as I've said, not yet. And why not yet? Because I do believe that crude can actually move lower than where it currently is. Now, downside targets. Wouldn't be surprised to even end up seeing this 161.8% extension tagged at close to 300. But the first target is definitely at 833, which is the 127% extension of this last rebound. In any case, when I have tangible evidence, technical evidence and fundamental evidence that crude is bottoming, I do think that Shell is one of the companies that you should be really looking in adding to your portfolio, because trust me, Shell is not going bankrupt, okay? Because if Shell goes bankrupt, there's going to be no company left on the planet in the oil business, and that can't ever happen, ever. Never say never, but definitely not within the century. I think timing the bottom in crude is also gonna, point a way for sell. And usually, it's also very nice watching for divergences between the underlying asset, which in this case is crude, and the company that is dealing with it, which is sell. So, for example, at some point, if you see, a lower low in crude and not in, some oil companies, or the opposite, might be extra evidence that crude might be bottoming out. Okay.
Steve, I have a view, and Norm's here. He wanted to come in and talk to us today. But if you look at your daily chart on crude,
yeah.
okay, you have your first low at 28. RSI was well under 20. Then you had your low at 20. You had a little higher RSI for drive 2. So there might be a third drive setting up for next week, which would be at new lows if that setup manifests. But you see,
might be the case. Something like this. What we drew when we were coming out of this triangle, what I drew a few days ago, it was something like this.
Yeah, that would be a 3.
I would expect then a much larger recovery.
Right.
Yes.
Yeah, and ideally, what I teach is on the divergence, usually it takes at least a couple, but ideally you want to see the reading at 30 or higher for a reversal to the upside.
Yeah, what we call a reliable RSI divergence.
Yeah,
yes,
that's right. Okay, buddy.
Yes, I'm totally with you.
Okay.
Totally with you.
Just thought I'd participate for a few minutes.
Absolutely. That's why we do this together, right?
It's hard for me not to talk for 20 minutes, man. I'm all alone here, man. I'm isolated and alone.
You know something, Dale? I envy you because I've spent the past 10 days being here with the kid, Nanny, and my wife working from here and having meetings.
I know, I saw your Skypes.
So suddenly the peace and quiet I had while working.
Yeah, the grass is always greener. You know, when you're by yourself, you wish you had people around you. When you have people around you, go, oh God, would I love to be alone.
You know us humans, that's how we function. Now, anyway, for a friend here that was looking for a tradable low in EuroCAD, first of all, I have to tell you, closing the gap at 150.150 is going to be a good start. And more generally speaking, if you get lucky and get a retest of this broken long-term descending channel, that's probably going to be, a nice buying opportunity if we even get there. Okay, so something like this. Now, you looking to buy the dip, I think given the nature of this move higher, which was clearly impulsive, I'm with you. I think looking to buy for at least one more move higher, looking to buy a pullback in EuroCAD is probably the right direction in the market you're looking at. And you also asked about AussieCAD. Where are you hiding, AussieCAD? There it is. So AussieCAD, listen, clearly remains in a downtrend. So between the two of them, I'm not saying that AussieCAD isn't going to eventually rebound as well, but between the two of them, I think it's clear that EuroCAD for the time being looks like a much better buy. Now, longer term targets, we have a long-term 78.6% fib retracement at 79.35. So I would want to see a lot more from here to start looking to buy the dip in AussieCAD. Okay, so I would want to see at least a move above this horizontal support resistance area before I can start looking to buy the dip. How do you see USD CAD and USD yen? I've talked about USD yen. I mean, I think that USD yen is probably bad currency to try to trade because if you're looking for a proxy for yields, you better trade other stuff. If you're looking for a proxy for risk, you'd better trade other stuff. So I would stay away from it. It has been whiplashing people, up and down, right? New high there, above multi-year triangles, trend line resistance, false break. Reverse lower, break below this multi-year triangles, trend line support, false break. V-shaped recovery again above this long-term triangle. I wouldn't be surprised to see another false break. I mean, I don't want to say what comes to mind. It starts with an F. So I'm not even thinking about trading it. There are much better opportunities out there, in my opinion. Now, having to do with USD CAD that you asked, I think that this, in the short term, at least in the short term, was some type of a blow off top. And so far we're working on posting here a huge evening star formation. So at least for a few more days, I would be looking lower in USD CAD, same as USD NOK. So if you want to be buying the dip in USD CAD, I can't blame you, but I think you shouldn't prematurely jump in the market to try to do so. First area of support at 141, but I wouldn't be surprised to see a pullback even back towards 138 before we can see buying interest again in the pair.
All right,
Okay.
Steve, Norm has told me he has to leave in 20 minutes, so is it okay to bring him on now?
Yeah, but 1 second, because I promised that I would very briefly cover the Nifty.
Yeah,
so
go ahead.
The Nifty, same situation as we've seen with other indices. I mean, non-stop move higher, and this has definitely broken, right? I mean, this is now a broken index. Of course, it has to recover. I mean, this is an interesting area of support that, it bounced from. But I think that any retest of 9,700 is probably a selling opportunity for more weakness. So I would be looking to sell the rip and not buy the dip. And having to do with USD INR, to finish up with our friend here. And as I said, you can join us and you can ask anything you wish for in the chat room, and we'll answer anything you want for. USD INR, new highs, reverse from there, quite a big reversal candlestick yesterday. So in the short term, I wouldn't be surprised to see a deeper pullback. But in any case, I think that 72 should be a strong area of support. So if you see prices back at 72, probably would be a nice, a nice area from which you might see more strength following that. Thank you, Dale.
Okay,
enjoy the
buddy.
interview.
All right, Steve, great job. Nice trading week. It's unbelievable. All right, Norm, I'm setting you up now. You're unmuted, Norm.
Hello, can you hear me, Dale?
Yeah, welcome back, buddy.
Okay,
so
what do
you
I
remember
do?
how to share? You scroll your little your mouse over the green box.
Fast intervention. Enrico is asking how much this bear market changed the probability of Trump being re-elected. A lot. And I'm not saying that just from a personal perspective, because that's my opinion. I'm looking also at the bet markets. It has changed a lot. He's not a favorite anymore to get re-elected. Does this mean this is a slam dunk? No, it isn't. But it is definitely affecting his chances to re-election.
If he has one, if he lets the election go ahead, which I hear he has no power to stop, but we'll see. Anyway,
I don't think we're going to have such an issue.
Okay, well, I mean, if the flu's around next fall and you have people in lockdown, how are they going to vote? That's my question.
They have plenty of time to work on alternatives.
Yeah. Okay, Steve. Steve's leaving us with an optimistic note. And Norm, welcome back to Face. And wow, I bet even you, one of the oldest traders in the cosmos, besides me, have never seen anything like this before in your life. This is even different than 2008, isn't it, buddy?
Oh yeah, and the only thing you maybe can compare it to in my career is maybe the crash of '87.
Yeah. So
anyway,
the planets. Anyway, I know most of the community know you, but in case you don't, Norm started watching the planets as a hobby in high school and college to try and get girls, and then he started using it for betting on horses, right, Norm?
No, that's the funny answer. Now the truth is, I was already interested in the stock market from the time I was 15.
Oh, okay.
And I stumbled on a book called Donald Bradley's Stock Market Prediction when I was in college.
Oh, yeah.
And all of a sudden I saw that you could correlate the stock market with the planetary cycles. And I started studying that, and I got an inheritance when I was about 2021 and took that money and invested in a copper mining company. because my background is my family is several generations
Oh,
scrap dealers.
Yeah,
I
mine
grew up
too.
hearing all about copper prices.
Was
growing
it
up.
Ben Gay Copper? Ben Get Copper? Because
What's
I
that
was
again?
given the copper company BENQUET.
Copper company was Anaconda. It was then the
Oh, okay.
world's largest copper mining
Yeah,
company.
because for my bar mitzvah, I was given some copper stock.
What's that again?
By bar mitzvah, someone gave me copper stock.
Okay. Anyway, so anyway, I made enough money to add to my inheritance and ended up buying a membership in 1975 on the Chicago Board Options Exchange. And right out of college there in the spring of 75, I landed there on the floor, and I was age 24, member market maker on the CBOE. I later got a membership at the Chicago Board of Trade, which the CBOE was a child of, and traded there too. So I got a little bit of experience. I've been doing this a while.
Yeah.
So anyway, I studied everything I could while I was there. Studied, Fibonacci, studied Gann, anything I could get my hands on. And I'm going to.
How about the chicks? The
If I
chicks
have
on the
one
floor.
talent, it's being able to reduce this stuff to very simple. Mr. Gann said, if you don't know who Gann is by many is considered to be the greatest market technician of the 20th century. Mr. Gann was an astrologer. I talked to somebody who worked with Gann for 10 years. That gentleman said that Mr. Gann, first and foremost, was astrological. So Mr. Gans also said that time was more important than price. Without time, prices are worthless. You get a big down market like we've had in some of these markets here, and you draw your Fibonacci retracement lines on there. You go, oh, I'll buy it here at this retracement level, and then you're going to just buy it, and you're going to get stopped at it, lose money, and go to the next level. You'll buy it and get stopped at it.
People are experiencing that right now, Norm.
And do that all the way down because you don't have time. You don't know when it's time for that market to turn. So that's what we're going to look at now. You got to have a timing. You got to have some cycles. Got to have some time. Okay. So now let's go. I asked Dale. I'm going to go back about 10 days or so. I asked Dale if I could come on his show on the 9th of March because that was a super day when I had a big convergence of cycles. If you've heard me here on Dale's show before, you know that I'm big on about 4 or 5 cycles in particular. I like we for short-term stuff, we like a full moon, a new moon, that kind of thing, and also like the cycles of Mercury turning direct or retrograde. That's due to the rolling motion of the Earth to other planets. It appears every now and then, about 3 times a year, that it looks like from Earth's point of view that Mercury stops its motion and reverses its direction, and it also does that with the other planets too. And when the planets change trend, the markets change trend, and I'll be showing that to you here in a minute. So now my charts are hopefully on the screen there now.
They are.
And we had on Monday the 9th, we had a full moon, but not just any full moon. And there's about, the last I heard, about 29 different lunar cycles, all I think mostly of different lengths of times. For example, from one full moon to the next, about 29 and a half days. There's also an apogee and perigee cycle. That's perigee is when the moon is closest to the Earth every month, and that's 25 days. So you see, it's only about every 14 months that these two cycles get together. It's called the lunar syzygy. There's a great Scrabble word for you. S-Y, S-Y, Z-Y-G-Y. You put that one down and you just wanted Scrabble. And there you go. So that's when the perigee, the close cycle, lines up with the full moon. And now you got the moon extra close to the Earth, and it's a full moon extra gravitational pull. And people tend to go crazy then, and the markets tend to go crazy then. So yeah, I wonder what happened. We'll take a look in a minute. And also that same day, we had Mercury turn direct. That's the opposite of retrograde in Aquarius that night. So you had all these cycles converging for the 9th of March. A week before that, I'd asked Dale if I could come on the show on the 9th, and the problem is that Dale was too popular. You got to book months in advance. That's the deal there. So I had to wait till now. What's that? All right, so here we go. Here's the chart. So I had here the planets tell me what markets to look at and when to look at them based on the astrological principles of my 40 or 50 years of research, So what we like to do is we like to sell on strength and buy on weakness, kind of like selling retail, buying wholesale, So if a market rallies into one of our windows, we look to sell. That goes down into one of the windows that we would like to buy. And the ideal is we're looking for an extreme. That would be the ideal. If you get some big extreme in the market at one of our change in trend windows, that's when you're going to get your really have the potential to make the really big money. You know, that doesn't happen very often, but when it does, it's Newton's law. For every action, there's an opposite equal reaction. You know, right? So here's your copper chart. You get a little bounce up into the ninth there, and guess what? That was a little bit of a short-term top, and then the copper from that point on has melted down. It actually panicked the other day. I think on the about the 18th, 19th, we got under $2. That's unbelievable. It's I think a multi-year low for copper. Here's corn had it also a bounce into the ninth and the 10th. A 10th, if I say after the close, that's what some of these are. They're overnight, and so we would be looking to do something on the next day's opening. So there you go. There's corn bounced into the ninth, the 10th, makes a little double top there between the 2 days, and that was a nice top on the corn. There you go. Here's your beans, same kind of deal. I had a triple signal there for the beans with the moon being in Virgo. That says beans, and in particular, and also with Mercury and so forth. And there you go. Here's the wheat. It also bounced into the same window and then went down. Here's the gold. Gold made a fantastic top there. Over $1,700 on gold. Where is it now? Well, as of yesterday, it got into the high 14s. You know, that's unbelievable. That's what 200. Is that over $200 drop in gold? You know, this is all based on the moon. So if you're not watching the moon, you're missing out. It's like going in a boxing ring with your hands tied behind your back. You know, it's not going to work well. Not going to be good. Here's silver, same deal as the gold. You know, right? Here's the S&P. And the S&P, the stock market is the big basket. Everything. If the plants do anything, the stock market will usually, respond to that. The commodities are narrow filters. They only respond to certain signs and certain planets, generally speaking. Many of them respond to the moon. Here's S&P made a low there early on the 9th and then popped up for the close of the 9th and into the 10th, and then we made a top, and then we melted down into this past week here. We have a little bit of a panic back here on the early 9th. That was a low, and so forth. Here's your T-bonds, one of the more dramatic moves we've had in the past 10 days. T-bonds had a blow-off up to on the futures contract up to 191 and change. I think 191.22. This is all-time highs on the bonds. What is that? You say you don't trade this stuff, but what does that mean for you in your life? I'll tell you what it means. There's a good chance that you might have a mortgage on your house. And look what happened to the and your mortgage is tied to the 10 and 30-year government bond rates. And look what happened here to these rates. They cratered on that day. It was a panic day on the 9th. The rate went down under 1%. Can you imagine? 1%. Are you going to buy a 30-year treasury bond and get under 1%? I think that's crazy, you know. We got down to 0.837 on this rate index. See that?
Good reporting.
What's that?
Good reporting.
Thank you. And over the next week, it went right back up 100 basis points. You know, a day or two ago, we got back to about 180 or so. We backed up yesterday about 15.
How about some forecasting, like what you're looking for?
I'm going to get there. But if we don't study the past cycles, we're not going to
Well, we could always look at the past. You know, what I'd like to see is some actionable ideas.
That's what I'm going to get
for people to look forward to instead of
there in 1 minute. But
instead of what's already happened and in the history books.
If you don't study the past, you're doomed to repeat it.
Well, we all study the past, but we're all looking towards what to do now.
Oh, well, your
not what already happened.
Your friend Steve there was looking at past patterns. You know, that's
but he's also talking about what could happen from here.
That's what.
And that's really the key, Norm.
We use the past patterns to look at the future. Here's your dollar. Here's your currency.
Well, let's start looking at the future now.
I am. Here's the dollar. It bottomed on the full moon. Here's your Aussie dollar topped on.
Okay, the dollar's near a high, a recent high. What are you looking for in the dollar from here?
Well, I'm going to get there. There's the pound at topping on the full moon, and there's your euro topping on the full moon. It might be known as a pattern here that your markets, so your favorite markets, your currencies, all turned on the full moon. Here's your yen, bottomed on the full moon. Okay, now here we go. Here's my day trading. I day trade the S&P E-mini. I teach people how to do this in about 30 to 45 minutes. Let's look at a quick trade here now. There we had a trade yesterday at 352. Not a trade, I should say, a time when we look at the market. If it sets up right, we might do the trade. There we go. There's 352 Eastern time. Let's go look at the market. There we go. We came down sharply into 352 and looking for it to go long about there. And it popped up, and you could have made maybe about 15 handles. That's about $750 in about 4 or 5 minutes. That's not bad. It's a little better than minimum wage, you know. Okay, now page 7. Let's look ahead. What do you think, Dale?
Yeah, let's look ahead.
Okay, so last night we had Venus at perihelion. Be looking for a change in trend in these markets: cattle, copper, cotton, stock, sugar, and wheat. And then over the weekend we have a big thing with Saturn. Saturn is a 29.5-year cycle. You divide the sky by 12. So that means that every 2.5 years you change signs, and that's what's going to happen this weekend. The Saturn is going to leave Capricorn and go into the sign of Aquarius. We'll get a shift in the economy.
Okay, could we get a possible low in the S&Ps if we're making new lows into early next week? Would you be attempting a bottom pick?
I got to present the stuff one step at a time. Try to be methodical and organized so people don't get, so I don't.
It's not a difficult question. I mean, this is a major astronomical event. I'm sure
Okay,
you've
so
thought
Saturn
about it
goes
before
into
now.
Saturn goes into Aquarius over the weekend. That's a big deal. Aquarius is copper, so we're going to have a possible huge cycle. Copper could be, we might bottomed early, a day or two early, when it went under $2. We went back to the $2 level. That might be a good level to look at for copper, just for example. And we have Mercury now coming up here. The next big window after that is right around Tuesday, plus or minus a day. We got Mercury at an extreme cycle. The next day we got Venus at an extreme cycle, and we have a new moon on the night of Monday night, the 23rd, in Aries. And so we'll be looking at your financials, which includes your stock indices, your buy debt instruments like your treasury bonds, your grains, and also your currencies and your precious metals. That's coming up Monday night. And we have, I mentioned Venus is going to be an extreme cycle there: cattle, copper, cotton, stock, sugar, and wheat. Okay, here's the charts I haven't shown yet. There's the cattle chart. It's been coming down, 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 and it looks like it might be making a little bit of a bottom here, you know. There's your cotton, same kind of deal, down, down, down. But at the bottom, potentially bottom of a trading channel there. Watch that. The sugar, all these markets have been going down, down, down. We might be looking at a low on many of these markets somewhere around Monday, Tuesday, you know.
Okay.
All right, that's pretty much it. So now if you'd like to learn more, here's how you get a hold of me. Here I'm in sunny Florida. You can call me on my landline, 239-594-3939. That's 239-594-3939. There's my email, nwinsky@embarkmail.com. You can Skype me at nwinsky_1. I got free day trading class. I will give you a free trial and teach you how to do it. I'll give you free coaching, which is worth thousands of dollars. I got the swing trading, which I have the currencies included in that too, and all these other markets. And so looking forward to helping some of your folks, Dale. Any questions from your gallery there?
Nothing real important. No question specifically. Norm is a master at what he does. Really, the key is to learn. And if you want to learn about the planets and their effect on markets, you can't find a better guy. How's that?
Okay, well, everybody have a great weekend. Watch this stuff. Contact me right away. Looking forward to help some folks here.
Okay, I hope you and your family stay healthy, Norm, and
Thank you. You too. Hope everybody out there stays healthy.
We're gonna, you and I could put some lamb's blood on our doorpost. Okay, and we'll be okay. The coronavirus will pass. I think
that's coming up maybe in April.
Yeah. Okay, buddy.
Okay.
Thank you, Norm. Good hunting.
Contact me right away so we can get you on some timing factors, so you're not just doing just Fibonacci. I like Fibonacci, but you got to have the right price at the right time. So looking forward to helping some of you folks. Everybody have a great weekend. Looking forward to helping you. Thanks a lot, Dale, for having me on.
Okay. All right, everyone. That's a wrap. Don't just count your pips, count your blessings. You know, I think sometimes it takes something major like this for us to realize, you know, money isn't everything. And I hope you and your families, same to you, Shabbat Shalom, Amira. And you're very welcome, Kevin and Brock, all you guys. Everyone be safe. I hope that everyone can stay healthy and continue to hang out with us and contribute. And I appreciate everyone's support. We're doing the best we can in a very difficult trading environment to keep you guys safe. This would be a great weekend for everyone to subscribe. I mean, we're all going to have a lot of time, and especially, you know, if you're fairly new, a good time period to learn about the markets. You don't have to trade. All right, you can learn. You could hang out in the chat room. You could set up a demo account, and you know, just ask a million questions in chat of, you know, professional traders. And that's about it for me, guys. I'll see everyone on Monday, and I love all of you. So have a great weekend. And the prisoner of California, Dale Pinkert, has been locked up for at least 4 to 8 weeks, and looking forward to getting out of prison and going to the beach. I may go to the beach anyway. Let the National Guard try and stop Forex Stop Hunter from going to the beach. So I'll bring my phone. Warm smell of colitas, yes. Anyway, anyway, guys, we'll all see you Monday. Take it easy. Adios. Yes, Gandhi, great example. Peace out.